Hello, everybody. I'm Evan Leong. Thanks for joining us today on the end of the week webinar to explain the most current updates for the PPP loan from the CARES Act that just recently got launched last week. Our first panelist is going to be Darren Leong, coming from the law office of Darren R. Leong, one of the premier employment attorneys in Hawaii. Also joining us will be James Sawyer, who's the district director for the SBA here in Hawaii. We also have Stacy Katakura, who is the CEO of Accumulus, which is an outsourced CFO and accounting firm to handle any accounting questions. And then in the background, we have Jeff Harris, who's one of the named partners from Torkeldsen. Jeff will be helping us answer the questions here live in the Q&A section of the webinar. And then later on with the questions that are sent to questions@braingainhi.com, which we will answer for you as best as we can and do those pro bono. I also want to give a shout out to Buddy Leong and Coco Leong. So if you're seeing their names in any email threads, they're helping us run our back end, helping us do the technical things that are needed for this webinar, as well as the Google Drive and documents and so on. They're working around the clock here along with their online school. Okay, so without further ado, let's take it to Darren. Thank you.
Thanks, Evan. So use the Q&A for questions, and I see they're already rolling in. I just wanted to start off by saying, so in these webinars we've been doing, there are questions just roll in the written format. So Jeff Harris, who in normal circumstances would be a competitor in employment law field, has graciously teamed up with us in this unusual and difficult time, and is donating his time as well to answer questions. So he's going to be fully committed to answering those Q&As that are coming in, while Stacy and I can provide updates. And then also, if you have emails to send in with questions to questions@braingainhi.com, we've now expanded that team so that we can as quickly and promptly get to your questions there as well. So let me just jump right into it. Since Monday, and we've been now 1 week exactly since the passage of this new law. And we are told that over 10,000 loans have already been processed today, and by hundreds of banks, and now at several $billion worth. So this is happening fast, it's happening furious, and there is a rush to get the PPP loans in. In the past few days, there were 2 pieces of guidance issued that have caused some clarifications, and in some instances, some confusion about how to apply the rules. And so we'd like to try and clarify those, or at least discuss those today. The first was a Treasury fact sheet that came out a few days ago, which was then superseded or replaced, or I guess clarified, by a 31-page interim final rule that the SBA issued yesterday. The other thing the SBA did yesterday is they switched out the application that they're telling everyone to use. So they have a new form application that they made some modifications to that are different than the first one. So with respect to the application itself, here are some of the key differences that the new one has in it. The new application, right at the top, has a section for LLCs, partnerships, C Corps, S Corps, and we think that is a meaningful step in answering the question that we've had over the last week as to whether those types of entities do not have employees necessarily. They may take draws, or they may take profits as partners or as members. do those entities count? So we think that the inclusion of the boxes for those entities at the top suggests that those will likely be included. Now, nothing further has been said in terms of, do I count both the employee pay and if I'm paid as a member, if I'm both an employee and an owner and I get two different payments, do I count both? That has not actually been clarified. So, there's a race to get this stuff in. And what we would say is take it all to your bank, submit it to them, and let them figure it out and sort it out. The application also clarifies that emergency disaster loans, the EIDLs that we've talked about, that those are to be refinanced into the PPPs, at least the portion that overlaps. So the portion of the EIDLs, if you got one, that is related to payroll, is going to be rolled into the PPP and subject to the PPP maximums. If, however, you are using a disaster loan for other purposes, then you can still hold it that way. And since we have Jane, I see, just joined on, I'm going to take actually a quick break because Jane is now from place to place. So I'll let her do her quick update and then I'll continue. Go ahead, Jane.
Okay, let's see.
We can hear you. You're on.
Yeah, okay, I'm sorry about that. We're just rushing around here. It's been a very busy day, and I'm pleased to announce that we really have gotten the program launched. The PPP loans are flowing through SBA, being accepted. The banks are sending them in. Right now, well, the information that we got for 5 o'clock Eastern Daylight Time, closing for most of the East Coast, SBA has already accepted over 12,000 loans from 875 banks for over $13 billion. So it is time this program has become a very real thing. We've thought it might be delayed, but I'm encouraging all of you who are on the phone to really pay attention to the legal advice with and the CPA recommendations, what you need to do to submit your application. Work with your banker to get these applications in. These loans, sorry, it's just been rushing around with everything going on. The CARES Act made this program available, $349 billion. So today we went through 13 for the Paycheck Protection Plan. And we're accepting applications, started up this morning. They'll be open in June. But obviously, at this rate, there's going to be some time needed to process. And then also, there's a limit on the money that is currently available. Seeing the kind of demand, we hope that Congress will take action if we need to get more money into this fund to help small businesses get through this pandemic and to get employees back to work and, all our businesses up, our economy functioning. So go work through your SBA lender, your local lender, your credit union or other banking institution. They know about the program. I just got a call from one of the banks and they're sitting on about 1,000 applications already, that have come in over the last couple days. And that's just one out of our many banks. So they're on it. They're ready to help you to get this program through. Now, it's going to provide capital to businesses. It doesn't have collateral requirements. You don't have a personal guarantee. SBA is going to guarantee this loan to the bank 100%. And all the loan payments will be deferred for 6 months. So even if this pandemic stretches out, you need to get back up and rolling. There's a little bit of time before the repayment starts to kick in. There's also some loan forgiveness if you meet certain criteria. And I think you're going to hear more about how to figure your loan amount and what the potential for forgiveness is from some of the other panelists today. This The loan proceeds can go to cover your payroll costs, including state and federal taxes, other benefits. For over 8 weeks, it can cover rent, utilities, and mortgage interest. So there's other overhead costs that will be covered as well for the term of this loan. It's 1% interest, and there's a term to pay it out or pay it off for 2 more years. So it's a very, very good program. A lot of steps you need to take with your banker as a responsible small business owner. It's open to small businesses with under 500 employees, nonprofits, and there are even some waivers of some of those things that are you typically think of with SBA loans, like your eligibility, your affiliation, and things along that line. But I apologize, the schedule is a little busy today, so I'm going to have to jump off the call, and I can rely on these other folks to help you through this process. Again, there's some good websites available with information. You can go to sba.gov, and the first thing that pops up is disaster assistance. You can find out about the PPP. You can find size standard tables that you might need. You can also still apply for the economic injury disaster loan and advance. Those are still available, and they fit together with this loan program so that you can figure out how to cover more costs. You can't duplicate any of your expenses, but take a look at the programs. Thank you so much. You know, Evan, Darren, Stacy, thank you so much for all you're doing, and let's get Hawaii back to work. Aloha.
All right, thanks, Jane. I'm just going to make one quick clarification to that. So in the definition of payroll costs, it's state and local taxes, not federal taxes. So before I pick back up with the changes to the application, for some of you who are saying, what are you talking about? I don't even have the basics of this down yet. I'd point you to the webinar that we did on Monday, this past Monday, which is posted on the YouTube channel, and also our written materials. So we have a memo that we have been updating daily. We're on version 6 now, and after today will be version 7. So that is housed on our public Google Drive for everyone to access and download and use as you please. So the current version is version 6, and that one is important because that one is the one that incorporated the new application form and also the interim final rule, okay? So those are the 2 resources I'd point you to. So in terms of the new application, the other thing it added was a revised certification. And the certification now follows and tracks the requirements of the statute much more closely. There's another certification that's added into the statute that you will, to the extent feasible, buy American-made products. And that I had not seen any reference to prior to this application. And a major change is that the prior form of the application required all owners of a certain percentage or more to sign, but the new one only requires 1 signature. So an authorized representative on the new application form signs that one. There still is an issue in the instructions of the new application that is, I'm sure, to cause some confusion, which is that the application form says that when you are calculating what your loan amount is by taking the average monthly payroll, the application form says it's 2019 calendar year. But what the statute actually says and what the interim final rule says is it's the prior 1-year period, which would be 1 year back from today. We would say provide all of it to your bank. So go back the full time to the beginning of 2019, all the way up through the present, provide all of it and let them figure out what the appropriate time period is. So with respect to the interim final rule, this 31-page document that was issued yesterday, it said a number of meaningful things. One is it changed the prior Treasury guidance and said that these loans are 1%. They are not 0.5% as previously stated. Now everyone is settled on 1%. So it's to the extent that the PPP is not fully forgiven, the remainder is a 1% loan for 2 years with a 6-month deferment of the first payment. And interest runs during that first 6 months. Okay, so 6 months deferred, 1%, 2 years. There is another clarification that you are only allowed to submit one application, and that the applications are taken and processed on a first come, first serve basis. And finally, the interim final rule specifies that if you don't have tax documents, for example, to show payroll costs, you could use payroll processor records, or whatever the most official records you can find are. So let me just quickly cover a few of the issues that have been coming up in the past few days in questions and in discussions, so that I can highlight those for you. And I'll use the format of the memo, which is the first thing is, do I qualify, right, for a PPP? Who qualifies? The application form adds at the top LLCs, S Corp, C Corp, so that's encouraging for those entities. And then with respect to the affiliation rules, meaning for those of you who for your organization have under 500 employees, but may be very closely connected to another organization, maybe it's common management or ownership, that sort of thing. There's a question of whether those organizations need to be aggregated together, which SBA refers to as affiliated. And if they're aggregated together, you might have more than 500 employees and therefore be disqualified. For a number of businesses, it's a very big deal because if the businesses are that size, oftentimes their payroll cost is going to be over the maximum. So they're going to be talking about whether or not they are eligible for $10 million. SBA in the interim rule punted on that and said, we will issue some further guidance soon. So hopefully SBA will come out with further guidance. In the meantime, we are left with what is a very involved analysis under the SBA's current rules as to whether you aggregate businesses together. We covered the max calculation, which is once you determine that you qualify, again, the qualifying reason needs to be uncertainty of current economic conditions makes necessary the loan request to support the ongoing operations of the eligible recipient. The part of that I would focus on is that the loan's necessary to support ongoing operations. Once you get over that hurdle, the next is how much is my loan? So again, it's 2.5 times your payroll costs. And as many of you are now aware, payroll costs are broader than just the wage rate to the employee. So payroll costs, and we have it laid out specifically in the memo, but it's things like vacation, parental, family, medical, or sick leave payments, separation allowances, healthcare premiums paid, retirement benefits paid, state and local taxes. So again, FICA, FUTA do not count, but state and local taxes count. So all of those roll into payroll costs. So you take, in terms of coming up with your average monthly payroll costs, the other helpful clarification from SBA was whatever the 1 year period is, you take that 1 year period, you divide by 12, so you get 1 month, and then you multiply by 2.5. So it does not require taking the first month, figuring out what that is, the second month, figuring out what that is, and then doing it separately. It's just take the entire 1 year period, divide by 12, multiply it by 2.5. Again, you have to remember that anyone paid over $100,000, you do not get to include the amounts over $100,000. So if someone is paid $125,000, you only get to include $100,000 as their payroll costs. One other thing that is, we think, a very big deal and just happened in the last couple of days is that SBA has now said, and the Treasury has also said, that the most you can use of the amount that you get for non-payroll costs is 25%. Okay, so you have to use for your whatever your loan amount is, say it's $100, you have to use at least $75 for payroll costs, not rent or utilities. And had a good discussion with a prominent local business owner today and talked through this issue. And it bears some expanding. So what we were advocating for previously, or at least saying was an option, was you could bring back all employees once you get the loan at 75% of their pay. And that would leave a very significant amount of money after you cover 8 weeks of payroll costs, right? Which is what the law allows. That would leave a very significant amount of money for rent and utilities. You cannot do that because that would exceed the amount that's limited to non-payroll costs. So if you reduce all your employees to 75% pay, you're going to violate the rule that says you can't use more than 25% for rent, utilities, etc. When you start doing the back of the napkin calculations on it, it really is, there's about 5% that you could lower employee pays to get to, the full 25%, 75% ratio that you're allowed to use. Effectively, what this 25% limitation is intended to do is to cause employers not to reduce pay. It's to cause employers to bring everyone back at their full pay. Because even if you do that, so if you have everyone at full pay for the 8 weeks following when you get this loan, that still leaves the extra half month of payroll costs that can be applied toward rent, utilities, etc. So what it's now turned into is, if you are getting this money, it's money to float your entire payroll costs for 2 months, and then float rent and utilities in an amount roughly equivalent to half a month of payroll. Okay. You should keep in mind still that getting the loan early is important, because the uses that are permissible for this money, they expire on June 30th. So even if you are still in your 8-week period to for forgiveness purposes, right? So if you get, say, you get a loan on June 1st, and for forgiveness purposes, what the law says is you have 8 weeks that you can use to pay payroll. However, you only have till June 30th for permissible use of the money. So what it ends up boiling down to is, it's the earlier of June 30th or 8 weeks. This has not gotten a ton of press or attention in the publications we've seen from other firms or entities, but just keep that in mind. So it makes getting a loan, say, in early June, even though it's before the deadline to get a loan, it makes it very risky because you don't have enough time to use it. So all the more reason that you should be, applying and getting that loan early, because at the latest you'd want to have this loan money in hand by about the last week of this month. So, and we don't know still how fast the processing is going to be. We are very, very encouraged by how fast the banks have gotten up to speed and how fast the SBA has opened its portals and stuff. But in reality, the money is not actually in anyone's hands yet. So once we start to see that, the first in-hand money was whatever, 1 week after the loan, then we'll be very encouraged. But if it's several weeks after, and then there's a big backlog, because I think, as Jane said, there were already 12,000 loans or something like that today. They may not be able to keep up with that backlog. So all the more reason to get these applications in, both so that you can, get the money and put it to use immediately, and also because if you get it too late, you're going to be restricted and not be able to use it. The last issue that comes up, or has been coming up over the past few days over and over and over, is the one related to full-time equivalent employees. So in terms of getting full forgiveness of your loan, you are required to keep the average monthly full-time equivalent employee count for the 8 weeks after you get your money. You have to keep the same number as a look-back period. And if you recall, there are 2 different periods of time that you can use as the measuring stick. One is the first 2 months of this year, and the other one is a February to June period of 2019, or mid-February to mid-June period. So in calculating whether you are meeting the number of employee headcount necessary, the correct term is full-time equivalents. That, unfortunately, has not yet been defined by the SBA. We have some analogs in other statutes, such as the Affordable Care Act, where for a full-time equivalent, it's essentially a calculation of combining the hours of part-time employees until they meet a certain number of hours. Like if you have 2 15-hour part-time employees, that makes 1 full-time employee. We don't know if that's going to be how it works yet, because no one has said how to count full-time equivalents. The SBA has also said in its interim final rule yesterday that it intends to release further guidance on how to calculate forgiveness. What we interpret that to mean is that they are going to clarify this issue. But this all has come out in record time. I mean, SBA rules on this came out 6 days after the law got passed. And so they're doing the fastest, the most pressing thing that they need to do, which is defining payroll costs, because they need to figure out what amount each of your loans is. And so that's where SBA, in our opinion, has put its energy and focus. I think once we get past this stage, then they will turn to the forgiveness portion and helping people understand exactly how to meet the forgiveness standards. But for now, essentially, we do not have guidance on what a full-time equivalent employee is. So with that, I will pass it to Stacy, and I see that there's more questions up, and so I'll help Jeff answer some of these written questions.
Okay, so I wanted to, I see this question coming up a lot, so I just wanted to start by answering a couple of them. The funds, as Jane mentioned at the beginning, there's $349 billion of funds that were appropriated for this, and roughly $13 billion has been released today. With the clarification yesterday, the funds are available on a first come first served basis. So I don't know if I would want to wait on getting your applications in, because the longer you wait, the more likely you are that the funds might not be available. So having said that, I just one of the things that I wanted to kind of go over is the use of the funds. I wanted to highlight the difference between the PPP loans and the EIDL loans. And if you just take a step back and think about what the acronyms stand for, it makes you kind of easier for you to decide which program or a combination of the two are best suited for your needs. So again, you can apply for and utilize both loans as long as they aren't used for the same purpose. PPP stands for Paycheck Protection Program, and it was intended for just that, to preserve payroll and jobs at the levels prior to the disaster. And the funds are to be used primarily to cover payroll costs, but it can also, as Darren went over, it can also be used for rent, mortgage, utilities. EIDL stands for Economic Injury Disaster Loan, and it was intended to supplement businesses who have experienced economic injury in the form of revenue losses. So while the EIDL can also be used for payroll, it can also be used to repay obligations that cannot be met due to revenue losses. So for example, if you are a restaurant, you might want to use the P3 loan to bring back your employees and use a portion of the proceeds to catch up on your rent and utilities. However, the P3 funds are not permissible to be used to pay your food vendors, suppliers, or consultants. And if you have vendors that you've been unable to pay, you might want to consider also applying for the EIDL. Some of the things, some other questions that that have come up is, again, where do I apply for the loans? The PPP loan, you would have to work with your local bank. I've gotten a lot of questions of, which bank should I go to? And I think you don't have to go to the bank that you currently bank with, but I think it's easier if you do, because they've already captured all of your information. And with the stay-at-home orders and everything, just social distancing, I think if you don't go to a bank that you currently bank with, you might have to go down to the bank to actually open an account and sign some forms. So just something to take into consideration. And I also wanted to go through a little bit about the process of the EIDL loans. So up until last week, the SBA website was extremely slow, and it crashed a few times. Over the weekend, the SBA upgraded their website and introduced a much more streamlined process than what was previously available. And I think they had to upgrade their website not only to accommodate the volume, but they also added the feature to be able to apply for the emergency EIDL grant of $10,000 that was made available with the passage of the CARES Act. So now, if you want to take advantage of the grant, you would go through the SBA website to apply. It's a very streamlined application process. It's a 2-page application, and you should be prepared. I think the most difficult part of it, or the most work that you might have to do, in addition to trying to get your gathering your business information, ID numbers and whatnot, but you have to be prepared to submit your financial data for the period of February 2019 to January 2020. And so it's not a standard reporting period, so you might have to do a little bit of calculation. But be prepared to report your gross revenue, your cost of sales, and operating expenses. Now, I think there's language on the application that the information you're providing allows the SBA to determine your eligibility for the loan. So it's not the actual application. There's also not an area to include how much of a loan you want to request. So presumably, if you're determined to be eligible, the SBA will contact you to negotiate the size and the term of the loan. So while you're waiting for that, I would still gather your documents necessary to be able to apply for the loan, which was your personal financial statements, some of your business information and whatnot. But with at the end of the 2-page application, you'll see that there's an area for you to check a box and complete your banking information to request the $10,000 advance. I did want to go over, I think on Monday's webinar, I didn't really go over some of the tax relief provided by the CARES Act. There is one thing that I wanted to point out. That there was the payroll tax deferral that was made available with the CARES Act, and it allows taxpayers to defer paying the employer's portion of the of the FICA tax, the 6.2%, through the end of 2020, with all deferred amounts due in 2 equal installments, one at the end of 2021 and the other at the end of 2022. And this would apply to any taxes due after last Friday when the CARES Act passed. And the reason why I haven't talked about this too much is because taxpayers that have had their P3 loans forgiven are excluded from this benefit. So I just wanted to point that out. If you were thinking of taking advantage of it, you would exclude yourself from loan forgiveness. I think that's kind of all I wanted to cover. So maybe we can go through some of the Q&A and try to address some of the questions that have come up.
Yeah, so we came much closer this time. I think we're 32 through 40. So again, a big thanks to Jeff and the Corkleton Law Firm for jumping in and helping us out. I will just point to our resources. So, we've been, as a community, business community, we've been hammering at this and figuring it out for the last week. Getting up to speed on a 800 something page bill and getting it out to the entire Hawaii business community in 1 week was a monumental goal, but we think this information has gone far and wide. That said, it has resulted in dozens and dozens of very, very legitimate questions. So a couple practical tips. One is, to the extent that you are confused and have questions, refer to our resources. So one is our memo for employers on the Google Drive that we update daily. We're going to update it again today. The other is you can email questions to questions@braingainhigh.com. And what we put together is essentially what I've never seen in Hawaii before, which is a group of employment lawyers and accountants who are devoting hours and hours of pro bono time to try and answer your questions. So please send your questions there, and we'll do our best to clear that inbox every single day and get back to you. We know that for each of you and your in your particular situations, that it's extremely pressing and time sensitive. So we are doing our best, and it's also why we've expanded the team to try and answer your questions in that fashion. The one other place where you can go is this webinar and the Monday webinar that we had earlier that gave the basic overview are on the YouTube channel. So you can watch those, and on YouTube you can watch them in 1.5 or 2 times speed, so you can get through the information faster. But that in combination, it's our hope that that should, for 90-something% of the business community, should be able to answer your questions and put you in a position to know whether to submit these PPPs and to get them submitted. The second piece of sort of practical advice here is, if you haven't started and you're like, what do I do? Then here are the sort of steps to take. Is identify your bank and find out immediately if your bank is already up and running to accept PPP applications. Then contact your banker, and also go ahead and fill out and gather the information. So fill out the application form that your bank is asking you to fill out, and also gather the information that they are asking for. Almost certainly that information is going to be payroll records, whether it's in the form of 941s or in the form of other tax filings. And if you don't have tax filings, then payroll processing records. And if you don't have payroll processing records, then I would say the best that you got, whether it's bank records or QuickBooks or other accounting or bookkeeping software reports. Just gather the best that you can and provide it to your bank, and get that application in as soon as you can. Because even after it's approved, and this goes also for the EIDLs, is you can always decline it. So the issue is that this is a time-sensitive program. As you can see, there are billions of dollars in the system in just less than 24 hours. And Congress committed, to try and get out $350 billion into the business community and economy as fast as it could. So there is some speed required of this. With that, I will kick it back to either Evan or Stacy. Do you have anything? Otherwise, I see that there are a number of questions that we did not get to. Evan will try to capture them. I think the last time there was some issue with that. So I would say if your question has not been answered, then email it and we will try to get it answered as fast as possible.
I do see
go ahead.
I do see a lot of questions about the independent contractors and sole proprietors, so maybe we just take a second to address them. So independent contractors and sole proprietors are eligible to apply for both the PPP loans as well as the EIDL advance. So I would go ahead and try to take advantage of those to the extent you can. The PPP loans, you would go to your bank again, and then the EIDL loans, go to the SBA website.
So with that, we certainly wish you guys all the best. We know that it's a uncharted territory, and we are here. Evan and his team, and Stacy, Jeff, and I, and perhaps an even further expanded team in the near future. We are here to try and help you guys through this because we know that is unprecedented for the business community. So thank you guys so much, and have a great weekend.